Mr. Rajkiran Rai of Union Bank joins us, Managing Director and CEO of Union Bank of India. Mr. Rai, good morning. Thank you for joining us. What is the reality? Everybody is talking about the slowdown. The general view from corporates is that we don't want to borrow, we don't feel like borrowing. Even if there is availability of capital, banks are ready to lend, but we do not want to borrow. Do you think it is getting bad to worse on a daily basis when it comes to economy and when it comes to credit?
Very good morning, Nikunj. I don't think it is bad as it is made to be. So it is a question of sentiment, and I'm very sure with the push of spending on infra, which is expected any time, and with some good announcements, I think the sentiment will change. So I think our economy is not into that bad shape, because basically the external environment which has created some negativity, added to that some problem in a few NBFCs and all that compounded the problem. But I feel that it is a sentiment issue, and I think we will be back to track very quickly.
Criticized, and I don't mean this badly, sir, but please appreciate where I'm coming from. Banks are being criticized for not lending. Banks are being criticized for being extra careful. And banks are being criticized for not transmitting what RBI has done on rate front. How would you defend yourself?
Okay, when it comes to transmission, I think there will be always a lag, but then you have seen that transmission is happening, and there are products being launched which are linked to repo now, so where the transmission will be more direct and quick. I think we are addressing that issue. When it comes to lending, if you really look at the corporates which got into trouble, we have seen a lot of corporate governance issues, and see, we are a balance sheet, we have a balance sheet based lending model. So for us, the credit worthiness of the balance sheet is very, very important, and that is the foremost. So when the balance sheets are under question, like where there are doubts on the asset qualities which are reflected in the balance sheet, naturally bankers will become a bit skeptical, and there is scrutiny happening. So it is not negative, it is basically, see, ultimately it is a cleaning mechanism, and it plays out. There will be some pain in between, but then ultimately the result will be good. So the better corporates, actually, they have no problem in getting credit even today.
Okay, a fair point, Mr. Rai. Morning firstly, but let's just narrow it down to numbers, because you've recently managed to reverse a 7-quarter long streak of losses. You've also guided for 1,000 crore rupee PAT in FY20. Wanted to understand what has changed in order to make the operations profitable in the last 2 quarters, A, and what are the factors that you think will be an overhang or a catalyst thereof to profit growth for the rest of the fiscal? Where will the stimulus come in from?
I'm very sorry, I need to correct. In the last 5 quarters, it is only in the Q4 of last year we made losses because of divergences. Otherwise, we are always in profit, including this quarter. So the capital wise, the bank is fulfilling the Basel III requirements as of now. Yes, we need capital, and the stimulus will come particularly from the infra. See, we are not seen much of infra spending in the Q1. So now it is expected to kick off. So I think the growth will come, and the retail is growing at a good pace. So I'm very sure Q2, Q3 will see a good credit growth.
I have to ask you the obvious question. We understand that one of your troubled accounts in the NBFC space, now thankfully you are nearing the end of the resolution. Do you think there could be a resolution for this big NBFC and that NBFC account, in a sense, which has haunted a lot of lenders?
Yeah, I think you should draw comfort from the RBI governor's speech other day in FIBAC, where he said we will not allow any of the big NBFCs to fail. So that gives a lot of comfort, that where the regulator is mentioning this. So, but then from our part as lenders, the resolution plan is submitted by the company. We have scrutinized that. It seems that in the given circumstances, this is the best plan possible. So now the process of approving the plan is on. So we are fairly confident that this plan will go through, and then I think with that like maybe this account should settle down by either this quarter or max by next quarter.
So, Mr. Rai, that means then that there will be no haircut for the lenders, am I right?
Not exactly, because as per this plan, there are some NPV losses. Because see, as per the regulatory guidelines, when the loan repayment are stretched beyond the original sanction terms, there are some NPV losses to be booked. So there will be some losses. At the right point of time, when the approval happens, we will come back and clarify on these issues. Since it is not yet accepted and all the lenders are yet to agree on all the final terms, all the creditors. So I think it is not right on my part to comment on those issues. So we will clarify at the right point of time.
At least you're talking about it. So allow me to ask you one last question. The lender has submitted a plan, and this is available on the website of Bombay Stock Exchange, that they've submitted a plan where they are making a case that the lenders should not take any kind of an haircut. The decision now lies with the lenders. You are the lender. So we want to hear your thoughts here.
Yeah, actually, see, yeah, there is a difference between haircut and NPV loss. So haircut is a straight write down of the debt actually. So here there is no write down of debt actually. It is actually because the asset classes are different. This NBFC has different asset classes. Some of the asset classes need some longer term of repayment. The cash flows will come like maybe beyond 5 years or so, which is beyond the present sanction terms. So naturally we need to create certain instruments to elongate the repayments. So there will be some net present value losses.
What is your view coming from on private sector capex? You know, to grant it to you, Mr. Rai, you are one of the PSU banks who's doing all the heavy lifting in infrastructure. SBI, BOB and Union Bank. I mean, these are the three banks which are giving money to infra projects. HDFC and Kotak is not giving money there. Other banks do not want to give money to infrastructure. So, I mean, you know, because of banks like you, infrastructure projects are going on.
Right.
But what are you getting in terms of an corporate sector capex? Are we anywhere close to a fresh cycle, or for the moment the corporate investment cycle is almost as good as zero?
No, actually, like on the infra space, actually last year also we have seen on the road project side there was no problem. All the projects got the financial tie-ups done, and they're all working. And if you see these construction companies who got these projects, all of them are completing their projects on time. So I think that initial burden of NPAs on this road sector and other issues which we had 5 years back, I think they are all gone now. I think now the projects are well assessed, and then these people are bidding very reasonably. So I think now when the fresh bidding starts, actually we will again get a lot of projects to finance, and the credit offtake will be there, and we'll continue to fund. We have no issues. And you also look at these companies, they are deleveraging. Actually, they are not holding assets in their books. So I think these are all very good signals. So I think infra will do well in the coming quarters, and I think maybe that will kindle growth in the economy, and along with the see, you also look at the housing sector, affordable housing. You look at that sector; it is doing very well. So with some push from the government on the Aadhar Yojana, Prime Minister Aadhar Yojana and all that, Awas Yojana. So they're doing well, and there is a good demand in that sector. Right. So I feel that these are the large sectors which will push the economy.
Okay, fair point. Also wanted to understand, because you were talking and briefly highlighting about the subject of rate transmission. How many quarters before you think a full transmission of rate easing would happen?
See, you can't directly compare the 110 basis points rate cut will directly translate into cut in lending rates, because we do not have that kind of model right now, where the liabilities are also linked to the floating rates. So our deposit rates are fairly rigid. So my cost is very inelastic on the deposit side. So unless I am able to bring down the cost on the liability side, it is difficult to pass on the same amount, because we don't borrow at repo rates from RBI. It is a very, very small component, because 95-96% of my fund come from deposits. So, and we also have to keep in mind that there are a big class of citizens who depend on deposits and interest income for their like particularly the senior citizens and the retired people. So it's a big chunk of their income. So I think we can't cut the deposit rates also to that extent. So assuming that the transmission of 110 basis point directly will get translated into continuing lending rates, maybe a bit very high expectation, but then the reasonable transmissions are happening, and gradually I think the other day RBI governor also indicated that we will gradually link all our assets and liabilities to external benchmarks. So that is the way forward. Once that happens, the transmissions will be very direct.
Of course, completely get your point there. I'm just going to ask you one more question as we kind of are a little short on time. We've already seen one round of PSU bank consolidation. Do you see another round happening soon? What's the outlook on that front? And secondly, on the capital infusion side, what's the requirement there, you know, from your specific point of view?
Yeah, I'll touch on capital first actually. So government has already made the announcement of capital infusion to the banks. We also need capital because we need growth capital basically. So like we have already put out the requirement because our board has approved our capital requirement, which is close to something between 6,000 to 7,000 crores. But then like on the minimum, because that is with a cushion of keeping some extra capital, but then the minimum capital requirement for this year for sustaining the growth what we are projecting may be between 3,000 to 4,000 crores.
Mr. I really appreciate your time. Glad you could join us, and I certainly hope that the resolution of that NBFC, ends soon. I mean, it's going to be a big relief for the lenders, markets, and for a lot of investors as well.